Good afternoon. Mixed trade for Asian markets as investors looked ahead to the U.S. Federal Reserve's monetary policy meeting this week. Japan's Nikkei raised earlier losses and rose 0.25%, while Hong Kong's Hang Seng Index dropped 1.25%. Chinese mainland shares reversed earlier losses. In the meantime, markets are likely to be shaken by concerns that there could be an imminent military conflict between Ukraine and Russia. In the local company news, Sibanye-Stillwater announced that it had terminated a $1 billion deal to buy the Santa Rita nickel mine and Sorota copper gold mine in Brazil following a geotechnical event at Santa Rita. Sibanye has been diversifying into metals used in electric vehicles batteries in a bid to transform itself from a gold and platinum group metals producer to a diversified miner with a green metals portfolio, with the Brazilian mines representing a significant step in that direction. To talk to us about how the latest developments globally are affecting our local markets, we are joined by Bright Khumalo from Vestact Asset Management. Bright, thank you so much for your time. I mean, let's get into what is happening, especially when you look at the market developments. Focus is moving to a Fed policy meeting this week. Given how that's playing out on a global stage, how's our market reacting to all of this news?
Sure. Our market today, unfortunately, we're down about 1.8%. And the biggest drawdown comes from the Resources 10 index, which is down 2.3%. I mean, everything is down across the spectrum. Industrials, financials, all down there, 1% and a bit. Looking at some of, the top 40 companies, we only have 2 companies in the green today, and that's British American Tobacco up 1.3%, Discovery up 0.2%, so that's 1/5%. Everything else basically is deep in the red. That's where we find ourselves in terms of, the market picture here locally.
So there have been various comments from, different financial institutions talking about the expectations for rate hikes. And Goldman Sachs, no different from the others when it comes to their expectations. I mean, given the comments that are coming out, perhaps even Goldman Sachs put aside, I mean, is our market, or not even our markets pricing in the number of rate hikes? I mean, what is the reaction here when we talk about expectations for rate hikes? Because some are saying March is going to be a live event. Some are saying we could see 4 or 5 rate hikes. Is the market pricing in all of this?
Yeah. So that's a hard one to speak, because we always say markets are forward looking at least into the next 18 months of what the current events and what future events may look like, right? So this is obviously a big one, because if you look at the U.S. markets from their tops, if you look at the S&P 500 and the Nasdaq from their tops last year in November, I think. You look at the Nasdaq, it's down 14% or more, and you look at the S&P 500, it's down from those top double digits as well, close to 11%. So yes, I could say it's priced in, but tomorrow's meeting, the FOMC meeting, is going to solidify the direction for markets. Maybe right now we are pricing in a lot. Then what will happen in reality? Maybe the markets will readjust. Because if you look at the futures right now, they're turning positive. But then again, on Friday and Thursday, they did turn positive. But those 2 trading days were red, at the end of the day, because of the volatility. But yeah, coming back to the rates, increasing, yes. Even Goldman Sachs, is pricing in 4 rates increases. And obviously that reduction of their balance sheet starting from July. I don't know. Hey, I mean, I think we'll have to wait for the Fed to act as and when, it happens, because people tend to, stick to the extremes instead of being circumspect and conservative.
So let's talk about that Fed meeting that is going to take place this week. I mean, some are saying that the Fed is in a tricky position in order for them not to cause any kind of hiccup, given how they may react. But the other concern that has come forward is that we haven't seen a strong, consistent, steady message on inflation. And given that the press conference is generally what analysts will be paying attention to, what will you be listening out for in terms of clues about where to from here?
Sure. I'll be honest to you and say, look, I don't really particularly take those things too seriously. I like to look at company news and earnings. That gives a better direction of, where to from here for that individual company into the future. But people who are enthusiasts, when it comes to the monetary economics and all of that stuff, they definitely, obviously, want to hear what's going to happen in March. Is it really going to be the first rate hike? And obviously, on the balance sheet side, like I said, will the reduction really start in July? And obviously, us as South Africans also, these are the type of things that do affect our, the decision of our own central banker, what to do with rates, especially since rates have been so low, locally and, internationally. So it's going to be interesting to watch. And obviously those assets that are affected by these, people who are holding cash, they're going to start, earning a decent yield on that. And individuals, that earn bonds as well, they're going to see those rates change as well, meaning you might not want to be in bonds currently, but in defensive companies.
Right. Before I let you go, U.S. earnings season is still in full swing. This week, we're expecting Microsoft, Tesla, IBM, and Apple. And I know Apple is one of the companies that you do look at outside of the other tech companies. But what will you be looking out for in Apple's numbers?
Yes. In Apple's numbers, if you look at the previous quarter's numbers, the focus was on the iPhone, especially with regards to chip shortages. So the company was very smart in actually redesignating the chips for things like, the iPad into meeting the demand for the new iPhones, right? So I wonder what's going to be, the play around this time in terms of making sure that those earnings are met, since the iPhone is one of those products that's still, high on people's lists of demands. So will Apple be able to actually meet that, considering that it was a holiday quarter there, including December. So it's going to be quite interesting to see that. Other than that, I think, the rest of the business is going to trot along quite nicely. And there'll definitely be an increase in, individuals that use the Apple ecosystem. So not only just iPhones, obviously, other devices as well.
Bright, thank you so much for your time. That is Bright Khumalo from Vestact Asset Management, giving us his expectation for the week ahead and also unpacking what is happening from a market's point of view. We're going to take